Good evening, everyone. I am CA Ravi Agrawal, moderator of this webinar. We are delighted to welcome you all in this webinar being organized by Continuing Professional Education Committee of ICAI. It is my pleasure to be a moderator for the webinar on critical issues and its solution of SCN of GST and overview of peer review. In a short while, we'll start this webinar. First, I would like to apprise you about CPE committee. The profession of chartered accountancy is growing leaps and bounds, and its phenomenal growth has brought the profession at the forefront. Today, our profession has acquired indispensable position in the business and economy. ICI continuously aims at developing knowledge edge so that the members stand out to the expectation of the society. To achieve this objective, the CP committee of ICI has been continuously striving for perfection, integrity, and knowledge, which make the chartered accountant synonym with excellence in service. In this direction, CP committee has always been proactive to the emerging needs of its members, enabling them to acquire contemporary knowledge and skills to face the challenges effectively by organizing CP programs and providing adequate opportunities. The program for this evening is as follows. We have two sessions of 1 hour each, and topics are solution of five critical issues in SCN of GST, getting ready for peer review. Our eminent speakers will talk about mentioned two emerging areas of professional interest. So for the first session, we have CA Rajendra Arora sir with us. He completed his CA in May 2003 and exclusively acquiring the vast experience in the field of GST from 2017. He has also written numerous articles related to GST, and he has delivered more than 1500 sessions on GST across the country. So I'd like to hand over to Rajendra Arora sir. Welcome, sir.
Thank you very much, Raviji. At the outset, I would like to thank the CP committee for giving me this opportunity and uh, the chairman of the committee, CA Purushottam Khandelwal ji, the vice chairman of the committee, CA Gyanchand Mishra ji, for giving me this opportunity to share my understanding about the subject on GST. So, and thanks for the kind words, CA Raviji, for while introducing me. Friends, the topic which has been allotted to me today is with regard to uh, show cause notices. Know that in GST, every tax is required to be paid on self-assessment basis, and whatever tax which is collected while through the process of self-assessment under Section 59 of the Act is required to be deposited within 30 days from the date of the due date when it is required to be paid. If it is not paid within that particular date, within that particular period, then it is a punishable offense and which may tantamount to a penalty of the tax amount equivalent to the tax amount also. In addition to that, whatever tax is required to be collected other than the self-assessed tax, I would require everyone's attention because whatever I would be speaking, that would be based upon either the law or the jurisprudence. And your attention is invited to each and everything which we are going to discuss through. So, friends, in addition to the self-assessed tax, whatever is paid by the taxpayer through the self-assessment process, the process through which it itself determines the amount of output tax, deducts the input tax, and other aspects of the law, compliance of the other aspects of the law, and thereby would is do pay the final figure which is determined by after applying the process of self-assessment as envisaged into the GST. After that, if even a single rupee is to be collected from the taxpayer after the self-assessed tax already paid by the taxpayer, then the department has to initiate a separate proceedings which is being prescribed in the law and commonly known as adjudicating proceedings. These adjudicating proceedings are conducted to determine the additional amount of tax, interest, and penalty payable by the taxpayer in addition to whatever tax already paid by the taxpayer through self-assessment process. Therefore, under the law, there are few sections which are described in the law within these complete enabling provisions, the necessary provisions for collecting even a single additional rupee from the taxpayer in terms of tax short paid, not paid, ITC wrongly availed or utilized, or RNS refund claim. So, in order to collect any additional rupee from the taxpayer, the department, the administration has to start with the fresh adjudication proceedings against the taxpayer, and that is commonly known as issuance of show cause notice. What is the show cause notice? Show cause notice itself, it, as the name appears, that the department is issuing notice asking the taxpayer to show, to express, to demonstrate the cause, the reason for which the particular tax which is collected by the department is or cannot be collected from the taxpayer. And again, when the taxpayer is asked to give the reason why a particular tax, interest or penalty is not required or liable to be collected or reversed or paid by the taxpayer. So the scope of notice is merely an allegation by the tax department to the taxpayer, alleging the taxpayer that in a particular instance, in a particular situation, the taxpayer has not paid or failed to pay the tax or has wrongly availed or utilized the input tax credit or has erroneously claimed the refund of the tax which was not supposed to be given to the taxpayer. In all these five circumstances only, the department can issue a show cause notice in order to collect any additional rupee
Hello.
of
Sir,
tax
sir,
from the
sorry to interrupt you.
taxpayers.
Hello. Sir,
Yes,
your
sir.
voice is not coming clear. Can you just check once?
Just a second. Is it better now?
Yes, it is better now.
Okay.
Okay, thank you, sir.
Thank you. So kindly keep a check whether voice is clear or not, and if it is not, then please interrupt in between. Hmm. Right. So we were talking about that if under these five circumstances, if any of the one is invoked or triggered, then the department can issue a show cause notice to the taxpayer to collect that particular tax not paid, short paid, wrongly availed or utilized, or RNS refund taken by the taxpayer. And this is prescribed under section 73 and 73 of the 74 of the act. Now the question here is, out of these five situations, five circumstances, scenarios, for no other scenario, for no other scenario, 73 or 74 show cause notice can be issued. I just give you one specific example which will not fit into the circumstances, scenarios visualized by the law. One of them is under section 77 of the act. If you have paid, if you have treated a particular supply as interstate supply instead of intrastate supply, the tax which you charged is IGST, but should have been charged C plus S or C plus UT tax. And you have paid the IGST on your outward supply. Now that particular tax is required to be repaid by the taxpayer in terms of C or S, C and S, and the I which is already paid by the taxpayer is required to be sought, refunded by the taxpayer from the department. Now, whether it is a short paid tax, answer no. Not paid tax, answer no. Wrong ITC availed, answer no. Wrong ITC utilized, answer no. Erroneous refund claimed, answer no. These five circumstances are the guiding force, the scope of the engagement, scope of the triggering engagement of Section 73 or 74. On the same lines, both sections are drafted by the lawmakers. Now, this wrong tax paid does not fall into Section 73, 74. Therefore, show cause notice cannot be issued for this particular purpose. That is one of the most classical example of the situation where the show cause notice cannot be issued, sir. Right, sir? Now, show cause notice is issued. Of course, I am coming because various show cause notices have been issued by the department, state department. I would say for 17, 18, around 10 lakh show cause notices were issued. And now 18, 19, around 7 lakh show cause notices by the state tax authorities have been issued countrywide. Now, what already has happened to 17, 18? Of course, we will try to find one solution for all the notices which have been adjudicated by the department for 17, 18. We'll try to find one still solution for them. And for 18, 19, we will talk five aspects which need to be taken care while going through the adjudication proceedings. Now, first of all, my dear friends, the first situation which we visualize under this adjudication proceedings, that is show cause notices, and the solution to them is, friends, we all know that there is a principle called principle of natural justice. In Latin, it says audi autem partem, where no one should be condemned. It is a constitutional remedy also. No one should be condemned unheard. बिना सुनवाई के किसी को भी सजा नहीं मिलनी चाहिए. No one should be condemned, no one should be punished, no one should be convicted or found guilty without being heard. That is called the principle of natural justice. Principle of natural justice has got three limbs, my dear friends. Three limbs, three verticals on which that principle is standing. In 19th century, when our civil and criminal law was framed by the Britishers, and in the worldwide also, in the entire world, in the entire globe also, all the civil and criminal laws have been based upon one basic fundamental principle on which entire law is enshrined with, is that is the principle of natural justice. No one should be condemned unheard. Even during our household fights between two children of ours, we cannot decide unless we do not listen to both the children and try to find who was at fault, who started the fight, who showed the anger, who abused first, and what are the consequences, who did what, in terms of whether in terms of protecting himself or herself, or out of anger a response was given. All these sorts of situations and the circumstances are to be visualized while judging a particular situation coming before you. Similarly, before honorable justice, various judges, the same situation comes as now, and everything boils down to the principle of natural justice, where no no adjudication in this GST law also is possible without giving a proper opportunity. The justice cannot be denied. Justice would be considered to be denied if a proper opportunity is not given. Now, friends, three limbs are there. First limb is opportunity of being heard in person. First, the person should be allowed to be heard physically one to one, like in income tax also, faceless assessment also. Now they have brought in the process of giving you the what you call that, virtual hearing. So they are giving you the virtual hearing where both the parties sit across, the other party asks question, and the other party gives responses to the questions. So this is a virtual hearing. Even the hearing is there, but maybe the virtual, but that still makes sense and paves the way for principle of natural justice. Although we do not like to comment upon the kind of virtual hearings are being given in the income tax assessments, nevertheless, there is a process, and that has been introduced a little later after the process of faceless assessment in income tax was introduced, was implemented. Similarly, in GST, in every judicial proceedings, wherever a justice is to be delivered, wherever a purpose, a particular purpose of the law is to be accomplished, principle of natural justice to be followed. My dear friends, you must adhere to this thing. You must, as a taxpayer, keep this in mind, that whether you have been given a proper opportunity of being heard in writing, proper opportunity of being heard in person, have is it been asked from you that your reply to the questions posed by him is being given, the time given to you for giving your replies, proper sufficient time, whether the replies have been considered by the tax authorities while issuing the judgments, while issuing the orders, whether the order considers the replies given by the taxpayer. Second, whether the opportunity, the personal hearing is being awarded to you or not. And third, again, one of the most important, which we normally miss during our encounters or during our exposures with the adjudicating authorities, and that is the right to cross examine. The right to cross examine the information, documents, statements used against me as relied upon document or as evidences to make the case against me, to put forth the allegation which have been made by the department, on what grounds the department has based upon to bring out with such allegations. I have a right, and that is also falls very much into the principle of natural justice, wherein I should be allowed to cross examine those statements on the basis of which charges have been leveled against me through the show cause notice, on the basis of documents on through which the charges have been, the statements, documents, information through which the department has leveled or alleged me for some wrongdoings like tax short paid, not paid, ITC wrongly availed or utilized, or erroneous refund claim. My dear friends, concentrate on these five panch pyare only, five things only. Beyond that, 73, 74 cannot travel. Let's be very clear about it. Now, so first principle which you must base upon is the principle of natural justice. First thing in the show cause notice you must base upon is the principle of natural justice. You have a right to cross examine, ask questions. And interestingly, I tell you one very interesting fact here for the purposes of the statements, my dear friends. When a statement is taken under Section 70 by way of issuance of summons to any person in the country, now a person is summoned. He has to appear before the authority who has summoned him. Authority has a right to take his statement. Statement is brought on the record. Statement is brought on the record. On the basis of that, the charges were leveled against me. The charges were put forth against me, the person to whom the charges have been made. Now, this statement under section, which is gathered or collected or obtained through section 70, is subject to section 136 of the act also, my dear friends, wherein it categorically states that the statement obtained under section 70 shall not be valid. Statement obtained under section 70 shall not be valid unless it is cross examined. Now I'm repeating, statement obtained under section 70 shall not be valid unless it is cross examined, and unless under following circumstances. Listen to me carefully. Statement under section 70 shall not be valid under it is unless it is cross examined. You have a right to ask the question against to the person who has given the statement against you, that Mr. So and so has purchased goods less invoices from me. Mr. So and so has induced me to perform particular activity which is an offense under the GST Act, or Mr. So and so does something in connivance with me and we are partners in that particular fraud, in that offense. If a statement of such nature is given by a third person, I have a right against whom the charges have been leveled on the basis of the such third person statement. I have a right to cross examine that statement and ask questions from him, cross him, that Of course, a crossing is a separate art altogether, and we cannot discuss in detail because it is a civil and criminal. I would say the art of art of lawyering. I would say this is the art of lawyering. So it is very difficult at this forum in this short span of time to discuss that art of lawyering. But you must be sensitized with this particular situation that statement is not valid unless it is not cross-examined and unless under the following circumstances. Now, under the following circumstances, statement shall be valid. Other than the following circumstances, statement shall not be valid. What's first circumstances? Where the person who has given the statement is dead. The person who has statement given the statement is untraceable. The person who has given the statement is far away from the place where the cross is to be done, where the expense to bring him on that to that particular place is much higher. Fourth, where the courts say that, direct that, yes, without bringing him here, that person who has given the statement, we accept the statement as such. Other than these four circumstances, no statement made by any person is valid, my dear friends. This is written in the law CGST Act itself. I am not bringing anything from the Code of Civil Procedure or Criminal Procedures. Right, friends? So you must always make a note of whether of the fact whether principle of natural justice have been followed or not. If not, you must object it strongly, because there are multiple jurisprudences which have been established in this country by the honorable high courts and the tribunals, that if a particular adjudicating proceedings, if a particular situation, if a particular process is done and which is not done adhering to the principle of natural justice, then the entire process stands null and void, invalid, illegal, bad in law, and thereby you can go and ensure that the entire proceedings are being quashed. Or maybe, of course, the courts may of course, first they'll quash the proceedings, and second, they will remand back the matter to the adjudicating authorities and directing them to give the proper time, the opportunity for replies, for cross, for personal hearings, for other documents to be submitted, all these things. So please, my dear friends, whenever you are going through the process of adjudication, do not forget to cross examine principle of natural justice also. Okay, my dear friends. Now, next point which comes before us under adjudication proceeding, the show cause notices, is with regard to one thing which very frequently comes to our mind uh, while getting these show cause notices adjudicated from various authorities. Now, a notice is issued under Section 73, and we all know that for 1718, under Section 73, the last date to pass the order was 31st December 2023. And as per Section 73, at least 3 months prior to the last date of concluding the order or passing the order, a notice should be given, and that comes out to be 30th September 2023. So the notice was given by 30th September 23, order was passed by 31st December 23. Now, 5 issues were raised in those 73 notices. You replied. The tax officer, the proper officer, got understood the replies and got satisfied with your replies also, legally, factually, and passed the order by uploading electronically DRC 07 on the portal. Whatever I'm saying purely based upon the law. And keep watch and track of each and every word. Each and every word what I am saying is going to help you to get your proceedings done, and in a more meaningful, immaculable manner, and which will help you to win maximum cases over. That is for sure. Now, uh, The DRC 07 is already uploaded on the portal under Rule 142. Now, later on, because the time limit for 1718, the notice can be issued, order can be issued by 6th of August 2024, 2024. 6th of August 2024, order can be issued under section 74. So prior to that, the notice can be issued. Prior to that, notice can be issued. Now, if a no order already issued under section 73, whether the proper officer can issue another notice on the same matter in 74 also, in 70 on the same matter, can it issue another notice under section 74 on the same matter? I'm sorry friends, answer is totally no. This is would be the reopening of the assessment, reassessment, and which cannot be possible. Reassessment is not allowed. In case of Honorable Supreme Court, also in the case of Prince Gutka Limited, the same situation was there. There are other multiple judgments, even Honorable Jharkhand High Court in case of Ambe Mining Private Limited also said that no possibility of reopening of assessment. Now I am reiterating and closing that section 73 notice is issued, order is passed. Now for the same matters, same issue, 74 cannot happen. But for other matters for which 73 did not come, 74 can happen. 74 notice can be issued, my dear friends. I hope you got my point, what I wanted to bring home. That was the second issue which I wanted to share with you. Right, friends? Now the third issue, my dear friends. Third issue is with regard to section 74. Third issue, 73 and 74 are two different sections, primarily on the ground of the fact that 73 does not invoke, does not level the fraud charges against me, and 74 does necessarily invoke fraud charges against me. Now, because of the fraud charges, suppression of facts or misrepresentation, suppression of facts or willful misrepresentation of facts, Section 74 gives the extended period to the lawmakers for issuing the show cause notice. Again, on those five issues only, Panj Pyare only, tax not paid, short paid, ITC wrongly availed, ITC wrongly utilized, or erroneous refund. Other than these five situations, 73, 74 cannot be invoked. And the basic difference between 73, 74 is primarily of fraud. That the intention to evade, there is a culpable state of mind under section 135 of the act. Culpability, the mens rea, the intention to evade payment of taxes was there. Therefore, section 74 can be invoked. Now, my dear friends, so the basic ingredient of section 74 is with respect to the fraud, that mens rea, culpable state of mind, the guilty state of mind. Now, next question under this category arises is that how would we protect? How would we protect that show cause notice issued under section 74? Because extended period is invoked. Extended period is invoked. That is 5 years from the due date of filing of annual return. The order can be passed. Under section 73, there is a time limit of 3 years from the due date of filing of annual return. Order can be passed. But extended period can only be invoked under some exceptional circumstances. And the exceptional circumstances are the matter of fraud, the mens rea, intention to evade payment of taxes, so that the time is given more to the exchequer to issue or to curb those practices done by the taxpayers, to issue notices and curb those practices done by the taxpayers. Now, next question arises in this category is that how would we be able to protect, defend the fraud charges put against us? The fraud charges, the charges of intention of to evade payment of taxes.
That is mens rea. The department, listen to me very carefully, friends. Under section 122 also, subsection 1, it categorically says that the penalty for offenses 21 offenses enumerated above, 1 122 subsection 1 clause I to 21, the offenses are there, the penalty is prescribed at the end of the subsection 1. It says 10,000 rupees or tax to be evaded, whichever is higher. 10,000 rupees or tax to be evaded, whichever is higher. Now, what does it mean? Tax to be evaded, wherever the word tax to be evaded is there, evasion is the chori. The in behind evasion, there has to be culpable mind, the ulterior motive, the motive with the motive to cheat the tax authorities, motive to gain what is not the taxpayer is not eligible for. That is the motive behind whenever the word evasion is used. So under section 122 subsection 1 also, and wherever the word evasion, tax to be evaded, is used, the department, the person who is leveling charges against me, the person who alleging me, has the onus, the burden to prove the fact that yes, there was the intention to evade payment of taxes. If I say, Mr. X, that you intentionally did such wrong, you had culpable state of mind, you have bad intention in your mind, and you did with these all activities with bad intention in mind to make loss to the revenue, to cheat the revenue. If I say this to Mr. X, then it is my primary responsibility to prove whatever I say, that you have done it intentionally with an intent to cheat the revenue. So burden of proof, the onus to prove the fact, lies on the one who challenges, except under section 155. Park this separately 155. Park this separately 155. Now, reiterating, how would we defend the fraud? The department, while issuing the show cause notice and notice under section 74, has to be very, very careful and cautious. My dear friends, before the introduction of the law, there was a circular issued on 11th March 2017 by then CBEC, Central Board of Excise and Customs. This circular was issued on the in the light of adjudication proceedings for the purposes of guiding the field formation, the officers who are involved in the adjudication proceedings, how to deal with how to deal with the entire adjudication proceedings, especially where the extended period is to be invoked under section 74 now in GST. Now, that circular is Meel Ka Patthar, milestone, my dear friends. That circular should be relied upon by each one of the taxpayer in this country. Not only of course, the tax authorities also are required to rely upon that circular, because the circulars are binding upon the field formation, the tax authorities, and if it is beneficial to the taxpayer is entitled to take shelter of that particular circular. If not, then they may deny to accept it or rely upon that particular circular. But for tax authorities, the administration, that the proper officers, it is compulsory to follow that circular. And that circular, although issued in the pre-GST regime, is very much valid, kick and running, because that particular circular is not yet been withdrawn, superseded. Although that particular circular superseded almost 86 circulars earlier issued in the service tax and excise regime. From 1985 till 2017, around 86 circulars were withdrawn or superseded or rescinded by that particular circular. Therefore, that circular stands very much valid, kick and running, and we should be able to rely upon that. And that circular categorically says to the tax officers that how would you issue section 74 where you allege fraud? In order to allege fraud, you have to prove fraud. In order to prove fraud, you have to demonstrate the fact that how did a particular charge, how did a particular offense happen. In the charge sheet, like the police officers, the investigating officer, the IOs of the police department create, they also not only give the entire information about, just a second. I beg your pardon. So, in case where 74 is invoked, the charges, the fraud charges are to be proved. The intention to evade payment of taxes are to be required to be proved by the taxpayer, by the tax authorities. For that, the tax authority has to bring to the fact that what all occasions have occurred actually, events have occurred actually, where the taxpayer has done certain activities in the wake of intentional fraud situation, state of mind. If that is not being proved on that particular charge sheet in the name of show cause notice, I'm sorry, friends, that show cause notice will not survive, at least on the grounds of extended period, that is fraud, intention to evade payment of taxes. Therefore, section 70 4, whenever is it is invoked, fraud charges are whenever invoked, you have to adhere to that particular circular issued, master circular, it is called master circular on adjudication, around 40 pages, my dear friends, issued on 11th March 2017, before the introduction of the subject, very well, very much well within the applicability and the legal validity of that particular circular. You must adhere to that. Another aspect which will help you to defend your fraud charges, my dear friends, I have seen in many situations in past 80 months now that that uh, the audit authorities under section 65, they perform audits, and while performing audits, they they allege, they propose to withdraw the exemptions taken by the taxpayer. Listen to me very carefully. A particular exemption is being taken, is being availed by a particular taxpayer. Audit authorities believe that this exemption is not valid or applicable to the taxpayer. Now, whether would this fall into the intention to evade payment of taxes? Whether the taxpayer intentionally followed a particular exemption? How would anybody like to defer or pass on the liability of tax by way of assuming an exemption on a particular tax liability? Does it sound sensible for a taxpayer, a wise taxpayer, or anybody for that matter as a human? Like, I want to defer my, I want to avoid my tax liability, assume it is exempt. Does anybody do that? I'm sorry, no person of a prudence, reasonable prudence would do that. This is merely, when I read the interpretation, I found yes, it is appearing to be applicable on my goods or services. Now, when the department read it, they said, no, no, it is not applicable to you. So it is merely a difference of reading, which commonly called as in difference of interpretation. I say that, of course, I agree. While reading the interpretation, one has to be very strict. Even the courts have already dwelled upon that. That the benefit of doubt for applicability of the exemption notification would always go to the tax authorities, not to the taxpayer. I agree very well within the lines of the honorable courts. But at the same time, is it possible that anybody would intentionally understand an exemption which is not applicable to him or her, the taxpayer? I'm sorry, it is not possible. And that's what our honorable courts have dwelt upon also. They have categorically said that that wherever there is an interpretational issue, wherever there is a difference of interpretation, section 74 cannot be invoked. Send Vivek. Wherever there is a difference of interpretation, that particular in that particular 74 cannot be invoked, my dear friends. Another thing which is very important to understand, there is one friends uh, the definition of suppression which is given in the law itself. The definition of suppression which is given in the law itself. Now, suppression also is one that where the charges of 74 are invoked. Charges of 74 are invoked. So, suppression, what is suppression? We need to be focused on that. Suppression is where a particular information, document, data, or a particular figure was required to be supplied by the taxpayer, and it is not supplied by the taxpayer in a statement written or the information called for by the tax authorities, and it is not provided. In that situation, just a second. So in that situation, if that particular information in data is not supplied where it was required to be supplied, that may tend amount to suppression, which is very well within the law. Section 74 gives the explanation of the word suppression. If a particular GSTR1 is required to be filed and a particular information was required to be filed and it is not given, it may tend amount to suppression. If GSTR9 says that under 8C, under 8 6M, you have to give the information of the previous year in input tax credit, taken credit in this relevant year for which you are filing the annual return, then if you don't do that, it may tend amount to suppression. Therefore, you need to be careful while filing your returns, GSTR1, 3B, 9, ITC 04, or any other document which you are supplying to the department. And you need to be careful that if a particular information is required to be filled in a particular column already there, you must give the information. Even there could be an error in reporting an information, but the calculation through which you have determined a particular figure is should be available with you, so that your bona fide is proved before the department that yes, we calculated the information on the basis of this. We may have not understood the correct preposition of the law, but we have not intentionally given you the wrong information, although we have given you the information, the data which was required to be given to you. So that is what I always recommend to the taxpayers, that in order to be saved from the suppression, you should be giving the information. Another aspect which comes to our mind while going for show cause notices, I am taking a one very specific aspect now. Under section 64, the matter of section 16, subsection 4 of the CGST Act, wherein the tax credit is taken post the limitation period. The limitation period as prescribed under section 16 subsection 4 is being passed and the tax is credit is taken. Friends, article 19 1G, article 300 capital A, the constitutional validity, the touchstone of the constitution have already been upheld by various high courts in the country, meaning thereby that section 16.4, the law by way of section 16.4, the prescription by the law is very much within the constitutional powers given to the government, meaning thereby that the government is very much within their powers to put a particular limitation for allowing the credit to be availed by the taxpayer. It is not unconstitutional. Now, I cannot, because it is a sub judice matter. It is pending before the Honorable Supreme Court in the case of Shanti Motors. I will not be before the Honorable Constitutional Bench of the Supreme Court. I will not be I will not be traveling into that situation. But my dear friends, I want you take to the other side of 16.4. 16.4 is for the recipient to take the credit, avail the credit. Although the word used is taken, not the availed. I'm not going into that detail also. I don't want to confuse the viewers of our premier institution that is there any chance between taken and availed. Let's stay away from that particular discussion. I want you to take to the situation where whether section 16.4 is applicable to the recipient or to the supplier. My dear friends, it is applicable to the recipient. it categorically says that input tax credit is to be taken by the due date of filing of September return. That is up to financial year 21-22. From financial year 22-23, the input tax credit for a particular financial year is required to be taken by 30th November of the following year. Like for 22-23 till 30th November 23, the input tax credit pertaining to 22-23 was required to be taken by the taxpayer. So this particular provision is very much for the recipient only and not for the supplier. Now, let's link this 16.4 with section 16.2c. The department in their show cause notices have said in the state show cause notices issued by the state authorities that there is a cutoff date within which the supplier has to file the return. If the supplier has not filed the return within that particular cutoff date, the recipient would be disallowed with their credit. My dear friend, section 16.2c, section 16.2 is the enabling provision, the preconditions to be complied with for availing the credit, taking the credit, enjoying the input tax credit. I am not going with the words right now. That is why I am especially giving the word of caution. Otherwise, I am a firm believer of choosing the most appropriate words for the most appropriate occasions, for the commensurate occasions. Now, now I am not the section 16.2 is the enabling provision for allowing me to take credit, avail credit, enjoy the benefit of the credit. Now, 2C says the tax on the supplies made by the supplier should have been paid by the supplier by way of either input tax credit or paid through cash. That is what section 16.2c says. If the tax, how would the tax be paid? The tax is required to be paid by way of GSTR 3B. And if the GSTR 3B is not filed by the supplier, we can safely assume the tax is not paid. 16.2c is not complied. That's what the allegation is made by this, the tax authorities, that your supplier has not filed their 3B. Therefore, 16.2c is not complied. My dear friends, is there any time limit provided where the supplier can file their or can discharge their output tax by this date only? No, sir. If I have collected the tax till perpetuity, the liability remains with me. It's not about input tax credit that 16.4 applies. It is about the tax liability under section 35 of the Act, where I have collected it from where I started within 30 days from the due date of payment of tax. I have to pay it. If don't pay that, it is a criminal offense. So now, for the purposes of tax collected by me and which is required to be paid, there is no time limit, sir. If I do not pay tax in time, section 50 says whatever tax you are required to pay, now pay tax with interest. And there are certain other penalties also. But as a supplier, if a particular date is passed of 16.4, that is cutoff date. For 18-19, the cutoff date for availing the input tax credit was 20th October 2018. For the recipient, how is it possible for the supplier to file its return? You cannot make it possible compulsory, because there is no provision in the law that supplier had to file their return, so that the recipient supplier had to file their return by a particular date so that the recipient can avail credit only then. It is not that. Section 41, categorically with effect from 6th October 22, categorically says, which has been amended, totally substituted, which says that if not paid, section 41 says if the tax is not paid by the supplier, the recipient shall pay interest on the input tax credit availed. But still they don't say, rule read with rule 37A, still they don't say that you reverse the credit, no credit allowed. They say, okay, reverse the credit. If don't reverse, then pay tax, interest. Reverse the credit, reavail it when that supplier files 3B. If you don't reverse, supplier did not file 3B, supplier files 3B after 30th November of the following year, you have availed the credit, did not reverse it, pay interest. That's it. No question of eligibility of input tax credit. So I am sorry, this is not going to stand by the tax authorities, for the tax authorities, by when it is being uh, when it is being examined by the jurisprudence, it is not going to stand. And you can put your point forth with full vigility and force that it is not possible. There is no such condition prescribed in the law. Now, friends, these were we have discussed the four issues. Now, another issue, a fifth issue. Now, another issue is with respect to you might be feeling that doing a touch base to each and every aspect wherever there are certain contentious situations. I will end up with one another contentious, another disputed, another debatable situation, but a solution. Because the topic we have used, the solutions to five critical issues in show cause notice under GST. So we will be focusing more on the solutions, rather merely on the problems, the criticality of these positions. Another aspect which comes to our notice quite often than not is Section 50, interest. It says, if you have Section 50, subsection 3 says, if you have wrongly availed a particular input tax credit for which you were not eligible, and the input tax credit availed is carried along with you, and you have not utilized it against offsetting that input tax credit against your output tax liability. You have wrongly availed the credit that is there in your credit ledger, carrying along, no offset, nothing doing. Section 50, subsection 3 says no interest is accrued. You are not liable to any interest. You have taken 1 crore rupees input tax credit wrongly, but you have not utilized it. So, no problem. No requirement of interest under Section 50, subsection 3. Now, next question arises in this category. This is a routine situation, everyone knows that. Now, tax you are required to reverse, no question about it that you have wrongly utilized it. Interest would not be there with the application of Section 50, subsection 3, provided the conditions are fulfilled. You have been carried along with the interest, tax always, all through the entire period of the wrongly availed period, that disputed period, and it was there in your credit ledger. Now, next question, the third situation arises whether the penalty shall be payable for that. Penalty shall be payable for that. My dear friends, again, the penalty is not automatic as per Honorable Supreme Court in many cases, to be specific, Dharmender Textiles 2013, Honorable Supreme Court. Penalty cannot be automatic. Penalty can be imposed only by way of process of law. They have to issue a particular show cause notice that why the penalty should not be levied against you. And again, the principle of natural justice has to be followed, and the opportunity of being heard should be given to me. That yes, why this penalty should not be leveled, why this penalty should not be charged against me. Now, the question here is whether the penalty would be leveled. My dear friends, the penalty is leveled, is charged, is penalized, the person is, taxpayer is penalized for wrongdoings. If there is no wrongdoing, if there is no mens rea, if there is no intention to evade taxes, penalty is not charged. There may be a symbolic penalty if, for example, 500 each, like in case of Circular 64 under Section 129 of the Act, detention, seizure, and confiscation of the goods during the movement of goods. If certain specific 6 instances like HSN is wrongly mentioned or address is wrongly mentioned, then symbolic penalty is charged 1,000 rupees only. Similarly, symbolic penalty can be charged here also, but to my humble view, in this situation where the tax is wrongly availed but not utilized, no interest and also no penalty, my dear friends. Okay, last but not the least, now we will try to finish by 5 p.m. Last but not the least, sir. So, under Section 161 of the Act, there is a procedure available for rectification of the errors, mistakes apparent from the records on the face of it. Now, if a particular DRC 07, that is the order under section 73 or 74, is passed by the proper officer, adjudicating officer, and you found that there are certain mistakes, errors, which are apparent with the naked eye and which do not require a long process to arrive at the mistake or error, long drawn process to arrive at the mistake apparent from the that particular thing, then they fall under the category of section 161. If it is apparent that I have given you the reply and you have not considered it, I'm sorry, and the case is very much clear, then it may fall into the category of rectification. I have already paid the tax, given you the DRC 03, but I have already paid the tax earlier in 3B itself while filing my routine regular 3B of 1819, but you have not considered it. You did not even know about it. It is again not a long drawn process for which a particular exercise is to be done to reach to a particular mistake which is there. It is apparent. You can see viewing at a particular document itself what tax is paid. The explanation is submitted. Reply is given. You have not taken this reply into account and or passed the order. Under those circumstances, rectification is possible. Of course, this is different from the powers of review which was there in earlier VAT regimes in state-wise in different states. But yes, there is a power for rectification. This can be done within 3 months. You can apply for within 6 months. The rectification is to be passed by the tax authority. For arithmetical accuracy or clerical mistakes, even after 6 months also, the order can be passed. Therefore, you can construe, you can draw inference that if a provision itself says that for arithmetical accuracy or clerical mistakes or calculation mistakes, you can pass an order beyond 6 months also, it means they are visualizing errors other than arithmetical accuracy or clerical calculation mistakes also. So therefore, and there are particular various past judgments also of various high courts and honorable Supreme Court also. So 161 is the remedy available to you. You must approach to your proper officer, give him the reasons, and this remedy would be only available on the portal itself. Your login only. You can apply through your rectification, apply through your login only. There is no restriction. You have applied for rectification, you can go for appeal. You have already gone for appeal, you can still apply for rectification. You have already gone for appeal, you have still apply for rectification. There is no restriction prescribed in the law, sir. Let me be very clear about it. You have gone for rectification, you can go for appeal. You have already gone for appeal, you can still go for rectification. Only condition is the rectification will not be passed unless you give a declaration that I'll withdraw my appeal. It is quite obvious thing. Earlier also when amnesty came for revocation of cancellation of registrations, they say before this thing, you can go for a cancellation, and if you are already before the appellate authority, you give a declaration that you will withdraw the appeal. Okay, I'll withdraw the appeal. You reopen my number. That's it. That's what I want as a taxpayer. So this may be the additional condition posed up by the tax authorities in Delhi, where I'm sitting. The DGST authorities, the Delhi government special commissioner, has already given such instructions to the department that you can go for a rectification. You can rely upon that particular instruction also and approach your respective state governments. So this brings us to the closure of the situation, and we have dealt with around 6 situations, not the 5 situations which I've said. Now the time does not permit, therefore I have to close it down here, and would like to once again thank the CP committee for giving this opportunity, the Purushottam Bhai and Gyan Bhai for giving me this opportunity, for sharing my little understanding about the subject, and nonetheless, the audience, the august audience of the Premier Institute of Chartered Accountants of India, for giving a patient listening. Thank you very much, friends. Thank you. Jai Shri Krishna.
Thank you so much, sir, for sharing your valuable insights on the topic. We have some questions from the audience. Can we just go through it? Quickly go through this.
Yeah, please go ahead.
Yes, sir. So I'm just asking you the questions. Sir, one question is State GST Authority has issued notice without DIN, and the same is sent by email and not uploaded electronically, whether the notice is valid or not.
DIN is not compulsory on the state authorities. They can
Okay,
only use the reference number.
okay,
The GST Council had directed the state authorities to, in fact, Supreme Court has directed the GST Council to direct states for bringing this common document identification number, but yet there is no compulsion on the basis of which document can be considered to be invalid if issued without DIN by the state authorities.
okay. So the other question is, can we claim the ITC of earlier years, say financial year 17-18, through GSTR 9 today?
No.
Okay. Uh, the next one is, sir, one of the client has received notice under Section 73 and the assessment was completed, demand was raised and entire demand was paid through ITC. Now the CTO charged interest based on the gross liability as there was no tax liability at all in GST return as it was set off against the ITC. So whether the CTO is correct the way he has calculated the tax liability.
If the liability was on account of tax short paid or not paid on the outward supply, and the tax is adjusted with the input tax credit, then the interest is liable. If it is with respect to wrongly availed input tax credit, and that is reversed with the carried over balance of the input tax credit in electronic credit ledger, then interest will not survive.
Okay. Okay, thank you so much, sir. I thank you on behalf of the committee and entire institute for sharing your knowledge. Thank you so much, sir.
You don't have to thank on behalf of institute. Institute is mine. I am institute.
Okay,
Thank
sir.
you very
Thank
much.
you. Thank you.
Thank you, Raviji.
Thank
Thank you,
you.
everyone. Jai Shri Krishna. Thank you. If you allow me, can I leave the meeting
Yes,
room
yes,
now?
yes, yes, sir.
Thank you, sir. Thank you, everyone.
We have our next speaker for the session, C. Sanjay Vastupal Shah. He has become CA in the year 1987. He is also a faculty of a certificate course of concurrent audit of banks and also for GST. He has delivered more than 100 sessions across country, including Mumbai, Pune, Delhi, etc. So I'd like to welcome you, sir, and the session is yours. Sir.
Yeah,
Thank you so much.
thank you very much. So basically, let me thank all of you and also, the CP committee, Purushottamji, Chairman, Mr. Srey, and all the participants. And I am glad that, all of us are here and you all had a very nice, knowledge upgradation of the GST matter from the earlier speaker. And I believe he had delivered a very nice lecture, very good confidence and everything, seems that, all the members will be more competent, more in position to handle the scenario. Now, allow me to share the screen basically. Let me share my screen. I hope you are able to see the screen. So let me start the slideshow. And dear friends, as you are aware, the today's topic is a peer review. And as you all know, that last year our institute has widened the scope of the peer review applicability. First of all, let us understand why peer review and what is the fundamental for the peer review. See, this peer review is basically, I would say, a sort of a primary evaluation of the technical, ethical, and professional standards as follows by the CA firm, which is briefly known as a practice unit. And it is in line with the practice followed by most of the advanced countries like USA, Canada, Australia, New Zealand. See, usually you must have seen that when any chartered accountant does any audit or assurance engagement, Usually there is no one else to supervise or oversee the assignment. And hence, this peer review provides an opportunity to have an insight of the kind of the, nature, extent, timing of the performances made during the course of the audit, the compliances with the SQC1, various accounting standards, etc. So, in a way, this is a very good opportunity for the practice unit also. And it also shows a legal and a sort of mandated compliance where the overall idea is to make sure that the practice unit follows the laid down guideline and is very much in line with the what is the requirement of the institute and the overall guideline. So this will help the practice unit in delivering the result which are as per the expectation of the society, of the particular user, and overall the given government regulatory framework also. So as we discussed that basically primarily the objective is to comply with the technical, professional, ethical standards, regulatory requirement, and to have the proper systems in place, including the documentation, to demonstrate the quality of the assurance services. Again, friends, let me tell you, our institutes really deserve a compliment whereby they are absolutely doing the work, whereby the guideline, the timelines have been increased, and now they are made very much, I would say, in line with the international standards, and the entire process is now supposed to be expedited and very much, comprehensive and faster than what it used to be earlier. So, friends, the first and the foremost requirement and the underlying assumption is the confidentiality. One, the confidentiality which a practice unit may expect from the peer review is also sort of, assumed and provided by the institute mechanism. And on the other part, there is also a confidentiality about any data or any document which will come across the peer reviewer in the course of the assignment. So it adds in both the ways, like secrecy of the data as well as the proper compliance with the normal confidentiality standards. So basically, there is an obligation on the part of the peer reviewer that the reviewer shall not make use or disclose the contents of the review report or any information from the process review as may be required by the board of council. So that is always an exception. That if it is a regulatory requirement or if it is required by the board or the council, then it is, it may be said to that extent, not otherwise. Now there is also a provision that if there is a non-compliance, then it will be tantamount to the professional misconduct as defined in section 22 of the Chartered Accountant Act. And then you know that the all normal consequences will follow. And that is why a declaration of confidentiality, which is in the form number 4, shall have to be signed by all the members of the board and board secretariat also. Now, because of the confidentiality, the counterpart is the immunity. There are two things. Immunity means a practice unit which is making available the record and document to a reviewer shall not be held liable under the Code of Ethics or a Chartered Accountant Act or a regulation as if it is, like a non-compliance, So reviewer also will not be held liable except for the liability arising out of his own misconduct under the Code of Ethics, The reason is that the PU may say that I am duty bound or I am under obligation not to share any information. So this is a sort of immunity given that if any document or information which is shared for the purpose of peer review, then it will not be counted as a non-compliance or any violation of the Code of Ethics as per the institute guideline. Sir, the member of the peer review board also shall not be liable by virtue of their having discharged the responsibility, because they may have to go through the report, they may have to look into the matter objectively, sometimes they may go deep into the matter, they may have to ask a lot of questions. So these all things may
Recording
require.
stopped.
So that is how
Recording in progress.
they have to have the immunity, that they also will not be held responsible and liable. Now, friends, today's session, I would say that let us divide in two parts. One is the applicability, the regulatory framework, the processes, the reporting formats, the requirements, the timelines. And the second part is the actual technical ethical standard which are required. Because let me tell you that whenever anyone has to go for the peer review, now actually before applying for the peer review, a unit must prepare itself. There is a lot of documents or the formats which are required to be made. So usually a PU should always make a practice right from day one, that this would be having an like parallel sheet going on, which will have all the data. One example I can share with you is the UDIN number. Nowadays, you know that the unique document identification number we have, which will be, required for all the assurance and audit and all engagements. So what will happen, that one has to have that record ready, because when you apply with the peer review, in the very first annexure, we will see into the detail. The PU has to furnish the details of all such UDIN generated during the year, which partner is signed, what is the assignment, and all that. Now, when we talk of the mandate, let me tell you, actually, see, there is, like phase 2, which is applicable from 1st April 23, which requires that following two type of the PUs will be mandatorily required. Remember, it is always open for the P unit to voluntarily apply for it. So we are talking about the mandatorily, where one is a category where the statutory of the undertaking. Now again, please understand, it is mandated to cover PU which proposes to undertake. So it is not necessary that they actually undertake. Even if they propose to undertake, they have to have a statutory audit of the unlisted public company having paid up capital of not less than 500 crore, or having annual turnover of not less than 1000 crore, or aggregate of the loan debenture of not less than 500 crore as on 31st March of the immediately preceding financial year. So basically, this is the phase 2, which means that these units have been added. Now, second category is the attestation services and having 5 or more partners. So basically, any PU which has a 5 or more partner and does any attestation services, then before undertaking any statutory audit, the concerned PU unit should process and possess the peer review certificate. So this is the phase 2 rollout, which means that, all the requirement which were earlier there are still applicable, and it is the same what was, like in addition to that. Now, if we look at the other things, the assurance engagement. Now, as we know that as a chartered accountant, there are two things. One is the assurance engagement. One would be, assignments which do not require any assurance. We'll look into the things. So assurance engagement means an engagement in which a practitioner expresses a conclusion designed to enhance the degree of the confidence to the intended user, right? And it does not include. So basically, it is a rule that anything and everything other than specifically not included will be deemed to be assurance engagement. So it does not include management consultancy engagement, because it does not have any assuring element actually, you are not issuing any report or you are not issuing any assurance, then representation before various authorities like income tax, GST. So that is also a sort of a not assurance engagement. Engagement to prepare the tax return or advising client in the taxation matter, engagement for the compilation of the financial statement. Now, what is the compilation? Compilation is like preparing the balance sheet format or P&L format from the trial balance without any name, without any report, or without expressing any opinion. Then engagement which are solely to assist the client in preparing or compiling quality the information other than the financial statement, Then testifying as an expert witness. Then providing expert opinion on the points of the principle like accounting standard or applicability of certain law. So these are the engagements. Then engagement for due diligence. Any other service rendered for the function which is not prescribed by the council to be assurance engagement. Then again, the phrase assurance service is used interchangeably with the audit services. Attestation function. When you attest something, it means that you are in a way verifying and audit functions. So basically, assurance services include all the audit service, attestation function, audit functions, and everything. So what is not included is what we have considered above. Now, my dear professional colleague, the peer review period usually means 3 financial years preceding the year in which the PU is selected, or such other period as any period as may be prescribed by the peer review board for conducting a peer review. So let's say, for example, in the financial year 23-24, if you are subjected to peer review or you are applying, then basically you will be liable for the period 2020-21, 21-22, and 2022-23. So these 3 financial years will be the period of during which the peer review will be done. As I told you, PU means a form of a chartered accountant practice, whether individual name, partnership firm, LLP, trade name, or any other such entity, as may be recognized by the Institute of Chartered Accountants of India. Then, usually, what are the documents required? So, primarily, there are, many requirement. I will let me basically share with you. See, there are certain things which are required. So we will just go one by one. Like what are the details required by the PU to be fulfilled? Again, there is always a very good material available on the peer review board website, always latest and updated. So basically, this is the appendix in which form number 1, which is the application cum questionnaire to be submitted by the PU. So the major change as compared to the earlier process is that this questionnaire itself covers a lot of information, which in the earlier time were being asked by the peer reviewer to the PU and a lot of time was consumed there. So now what is happening? That even before peer reviewer is selected, even before the peer review accepts, the details are to be furnished to the peer review board by the PU unit. So there is no scope of any change or any thing which can be changed at a later date. So this is the form which is required to be done by that. Then when if you see our form, this is the form which requires to be done. Then these are the type of the services which the firm may have undertaken. My dear professional colleague, based on my experience, I would suggest that before you apply for the peer review, ideally PU should prepare an Excel chart and mention all the details of the assignments undertaken during the period of peer review and allocate and identify them like assurance engagement or not assurance engagement, the name of the person who has signed, the turnover of the company, kind of the audit. So what will happen later on? There are many details which may be, required to be furnished from the same data. So unless you have the full database, it will be not possible to cover it unless you have this database ready with you actually. Correct? So this is the kind of the scenario, and in my opinion, this will be the very guiding factor. If you are well prepared, you will be able to do the all the further reporting and the processing based on the requirement. So these are the sort of information which is required. And I would say that, this all questionnaire basically deals with the basic idea of the firm, and then, like the detail of the staff member, partners, branch office. Remember, whenever there is a change in any detail, always keep the relevant document ready, like change in the partner. So, the change in the constitution of the firm or the member card of the institute ready, mentioning the date of the change, branch office, any change, how many assignments will be done by the branch, how many assignments done by the HO. So these are all the, like this is very important, that you one to furnish the details where the professional fees from any client exceeds 15% of the total gross receipt. So here also, that your master database will be very helpful, where you have to mention the fees against each assignment, and then if you filter out client wise, we will get the name of the top clients, and if any client is exceeding more than 15%, then those details will be furnished here. So the idea is that if there is a concentration or if there is a lopsided or more dependence on any client, the peer reviewer will be able to get idea and will be able to focus on those assignments more. And the criteria like independence, self-review thread, and quality standards, SQC, will be more detailed in such scenario actually. Then digital competency maturity model, then any disciplinary action, then like these are the, if there is any tender, then the details will have to be furnished. Then type of the engagement, like as we know that these engagements are not included. So specifically central statutory audit, like PSU banks or any other entity, the statutory audit, which include the branch statutory audit, then tax audit, internal audit, any others, any certificate, concurrent audit, I would say stock audit, GST audit, or etc. etc. So these will be covered as like this thing. Then if you will look at the generally what is happening, that this is a letter for visit, which means that normally the peer reviewer, okay, let us first go to the process. I would say that let us start the detail where we know that, so these are the basically process. So the process will be first the PU unit has to apply in the form to the institute. Then institute will initiate the peer review and give the choice of the 3 peer reviewer to the practice unit, most probably in the same city or the nearby location, as near as possible. Then within 2 days, the PU has to give the name of the PU, the practice unit, which they want to select. So once they select, then what will happen? That the institute will be issuing the intimation or the email to the peer reviewer who has been selected by the PU unit. So then after, so see the idea is that the PU shall select one out of the 3 unit and intimate the board within 1 working day. Then after, the board shall appoint the peer reviewer selected by the PU in accordance with the guideline. So again, the peer reviewer selected will have option whether he wants to accept the assignment or not. If for any reason a CA may have been enrolled and entitled for a peer review, but for any reason he may not be available in that period. Say for example, if I am abroad in the next month, then I know that I will not be in a position to justify my assignment. So whenever I will get an intimation from the peer reviewer board that any PU unit has selected my name as a peer reviewer, I shall not accept, and I will intimate that I expressed my, disability or, like whatever reason, and I am unable to accept the assignment. Once if I accept, then the board shall intimate to the reviewer that submit a declaration of confidentiality in form number 2 within 2 working days. So once the PU shall also provide a copy of the application cum questionnaire form to the reviewer within 2 working days of the appointment of the reviewer. Then what will happen? That peer review of a new unit based on the antecedents of the partner and the policy parameter. And the reviewer shall then after also submit a report to the board in the form prescribed. Now, this is the brief idea about that. Now, if we go into the basically document required and the process, let me take you through the letter for visit. The PU shall use the format which is given by the peer review board. It is 1 or 5, whereby it will issue that I plan to visit on so and so date, and further on going to the questionnaire submitted by the PU is requested to keep the file pertaining to the following client ready. So what will happen that the PU unit can be ready with the detail based on the client selected and the file selected. Then if the PU is required to submit the further information, then the reviewer shall seek that information in form number 6 and will also use it and ask that why they are doing it. Now, in an unlikely event, if the time extension is to be asked for, then joint intimation will have to be made by the PU and the RE, whereby, they will say that following is the reason, and why they want to, have more days, and that will be the kind of the thing. Then if you see, another thing is that we'll go into the time schedule, which is again very important. Now, this is, where you will see that usually the peer board will notify day 1, then panel will be sent to the peer reviewer with the notification of the fees. So PU to give the choice on day 5. Now that declaration will to be accepted by the peer reviewer on day 7. However, reviewer on receiving the intimation shall intimate to the board, then issue the letter for the proposed visit and proposed sample assurance services given. So what will happen on day 9, this process should be done. However, if the peer review is unable to accept, then there will be additional 4-5 days, because then again the board will ask the PU, and they will again go back to the second choice of the peer reviewer, and then it will be starting. Additional clarification required detained. Then if there is a visit to the office of the PU after fixing the date as a mutual consent. Please remember, it is always a mutual consent. So it cannot be arbitrary. It cannot be that peer reviewer can come anytime. Usually there is a courtesy because it is a parallel form. See, the word peer indicates a similar, right? So there is no question of anybody being inferior or superior. So the peer reviewer will normally coordinate, will ask for the convenient time, and PU also at the same time will be more cooperative and will be, giving them the detail. It will be giving them the detail for that thing actually. So this is the kind of the scenario. And then reviewer to carry out the review and send the preliminary report if required. However, there can be a situation where the things are in order, then there may not be a need for the preliminary report, and straight away peer review report can be issued. Then PU to submit the representation of preliminary report, the reply basically on response. Then on completion of the reviewer has to submit the following document. Please remember, the peer review board is very, very active and very, very alert. So if any of the format is not there, any of the document is missing, there will be a unnecessary wastage of time. And again, the board will ask for the more clarification document, and then the things will be done. So the final report will be in the form number 9. There is annexure, there is annexure number 2, annexure number 3, list of the sample selected, preliminary completed copy, right? Then a copy of the final report will be sent to the PU also. And then the board will go through whatever primary document or whatever this thing. Then they will be, like issuing the letters to the email to the peer reviewer, which is CC to the PU, which in turn peer review will comply and submit to the peer review board. On satisfactory compliance, peer review board will issue an email that yes, the peer review report has been found and has been observed to be in order, and then they will be presenting it to the next board meeting of the peer review board, and where if it is approved, the necessary certificate will be issued. So ideally, the entire review process should be completed within 20 working days from the date of receipt of the application in form number 1. So this is the, what our institute is doing to ensure that the kind of the scenario and the kind of the things are being done for making the things simple for the PU. Now, what are the simple criteria? Now, this is very important. There are specifically criteria. Again, peer reviewer has to understand and do accordingly, because if the sample selected do not meet with the criteria, there may be a requirement to again, go for the review and select more criteria. Usually, this is a minimum sample size. It depends on the average annual gross receipt for the assurance services, right? So depending on the amount of the gross receipt, minimum sample size has been given. Now, if the total population is less than the minimum, then 100%. So say, for example, if the firm's total turnover is 15 crore, and the number of clients are 19, or the number of assignments, so minimum sample size is 20. Because the actual sample is less than 20, entire, that is 100%, which is 90 samples will have to be selected and to be done. Now, firms which are in existence from 1 to financial 3 financial year, which is a comparative new financial year, then basically 5 to 10. So these are the guidelines for issuing the sample criteria. Then, this is the important thing for the fees. Usually the fees will depend on the average gross revenue from the assurance services per annum. So you have to take the total revenue for 3 years, divide by 3, to get the simple average. If it is, like up to 10 lakhs, then 15,000. If they are conducting the listed entity, then 80,000, like that. If their revenue is between 1 crore to 3 crore, then 60,000, 72,000, and so on and so forth, actually. So these are the fees where you will be getting the idea. And again, it is mandatory. There is no discretion. There is no scope of any change. So neither PU can ask the peer review for any fee concession, nor peer review can ask for the more fees. So this has been done in order to ensure proper coordination and proper, smooth functioning of the entire process by the both and all concerned in the score. Now, these are the, SQC. Now, as you are aware that, the standards on quality control, like SQC1, it is very, very important. And I would strongly suggest that all the part should be properly reviewed by the PU before submitting to the peer reviewer. Now there are 6 elements of the technical standards where of this quality control form. Like one is the leadership responsibilities, second is the ethical requirement, Then there is a acceptance and continue the client relationship, HR, engagement performances, and monitoring. So technical, professional, ethical standards will include that whether all the applicable accounting standards or Ind AS which may have been applicable have to be followed and they have been applied in a particular case or not. So if a particular client ABCK has been selected, then peer reviewer will see that whether all the applicable standards have been actually applied. And if they are not applicable, why they are not applicable. So remember, this is an evaluation from the overall concept. So one thing I tell you that this does not include or normally it does not require the recalculation of the figures or the numbers. Usually it only ensures that there are documents which prove or which can exhibit that the proper performances of the requirement have been done or not. So like if there is a physical inventory, for example, verification, then whether there are documents which will vouch that yes, the physical verification was done actually, that is important. Correct? So this is very important to know that this is not a financial review. Of course, there is a very thin line of demarcation, and sometimes financial also can play a major role if for a particular sample. But the overall idea is to look at it from six different angle actually, right? And then quality of reporting. Again, the quality of reporting is not the peer reviewers quality of reporting. Quality of reporting by the PU. Whether the reports have been issued in time, the formats have been properly done, the observations have been dealt with, qualifications have been done, the disclaimer have been done, there is a proper communication like letter of appointment is there, then audit engagement letter is there, then letter of representation, management representation letter is there. So these are the documents which are required and which will be mandatorily having in the file. And as we all know, that a PU may have a two different file. Like one is a permanent file, one can be temporary file. So permanent file will have all the basic documents like what I said, that appointment letter, then renewal appointment, letter of engagement, understanding between the client, understanding of the scope of the assignment, the organization structure, the document of the constitution like memorandum, partnership deed, LLP deed, etc. of the entity. So these are the documents which always have to be available for the PU unit in the master file. Then the temporary file will include the audit documents actually, like audit status, audit reviews, the audit queries, how they have been done, whether the work has been carried out all throughout the period, all throughout the year, the proper observation has been noted, they have been escalated to the reviewing partner, engagement partner, and then in turn they have been properly considered at the time of issuing the review. Then whether they have been dealt with the management, whether the discussion with the those charged with the governance and the management has been done, whether they have been documented, periodical meetings have been done, periodical reviews have been done, the team have been properly trained, guided, all these things will be covered. Then training program for the staff, sometimes what happens that usually a meeting is held, but documents will not be there. So I would strongly recommend that all the PUs should have the proper documents of the training imparted. What you can do in your office if you are doing review. I suggest you can just prepare one paper. Write on the top that minutes of the meeting held. Write down the topics like we discussed the tax audit, the clauses from 1 to 10. You discuss with respect to the various client and take the name of the meetings, the members who were present. Then again, as I discussed that, these are the procedure which we have already considered. And then reporting, we discussed that how it should be done. Then again, communication shall be made the email address prescribed by the board from time to time. So all the communication will be usually marked with the CC to the peer review board. And then fees we have discussed. Validity is usually the 3 years, or any such period as may be decided by the board, but commencing the date of the receipt of the peer review report. So basically, if the peer reviewer report has been received before the expiry, date of commencement shall be date following the date of expiry. Otherwise, it will be from the date of issuance of the period. So please make sure that there is no gap. Say for example, if the review report has expired in January and the next peer review report has been received in the month of March, so the peer review certificate will be from the month of March, which will mean that there can be a situation where for the 2 months the PU had no peer review certificate. Again, it is a responsibility of the practice unit to complete its peer review and ensure the compliance of all necessary documents within the sufficient time, and make sure that they are available, and it will be done. So this is the idea. And again, the peer review is also under the obligation to comply, then initiate the appropriate action, shall not take any extract of the PU unit, client, file, or record. Usually, they will come to the office, they can make some notes with their own pen or pencil in their own handwriting. Normally, they will not take any copy or extract unless it is really required actually, and with the permission of the PU unit only. And the peer reviewers have submitted the peer review as we have discussed. Again, one more thing, a peer reviewer is entitled to appoint an assistant to conduct the peer review. However, such assistant also has to be a chartered accountant, meaning thereby that a peer reviewer can appoint somebody as a peer review assistant and intimate to the practice unit, so that assistant can help the peer reviewer and conducting the work actually. And all the obligations which are applicable to the peer reviewer are equally applicable to the assistant who is helping the peer reviewer. One more area which are required to be seen is the policy of the firm, that how they are accepting the client, and again how they are continuing. As we know that acceptance of the client, usually we know that everybody will be happy, but there are certain procedures to be followed. Whether the PU as a practice to go through some due diligence or a sort of like a basic verification kind of the thing before accepting any assignment. PU is expected to justify the assignment. So the PU should make sure that they are competent to carry out the assignment. Number two, they have the enough resources to conduct and to carry out the assignment. Thirdly, they will be able to devote the enough time and resources for that particular assignment. After assessing that, you will see that whether the fees will be commensurate as per the institute standard, as per the firm's own standard, and as per the resources and timing required. Only after satisfactory compliance, the PU normally accept. So PU has to demonstrate that for the sample selected, whether the PU as a practice. In fact, this practice will be common for all the client actually. And then, even for the continuation, as we discussed, that PU should review the continuing. If there is any observation or any, like disclaimer, major qualification, PU should review why the assignment should be continued. If there is any incident which results into the not so coordinated communication between the auditor and the client, then PU should have a practice to review whether to continue with the assignment or not actually, right? Our institute guidelines or the code of conduct is very, very exhaustive. I would strongly recommend that you should go through and make sure that you are complying with that. And again, more important is that once a document. So sometimes the practical scenario is that these are being followed. Everybody will say, yes, I know, I have taken that, I have done this. But merely orally saying that will not sufficient. It should be documented. Like any assignment, there should be that yes, they have taken some ROC search, for example. They have done some public domain. They have taken the reference. They've visited the client place, they've understood the assignment, they've estimated the resources, the past experience of the similar client, the past assignment of the same industry, and what is the like experience of the PU will be very important actually. HR, whether the firm has a policy, whether they appoint the proper competent resources, how they have been trained, whether they have, like made aware, they are sensitized, how they are compensated, everything will be required actually. Then engagement performances. So whether any engagement, any assignment has been done, performance, whether they have been performed and whether the satisfactory results are there, they need to be reviewed. Sometimes there may be a requirement of getting a quality review by other firm for many large assignment. Again, nowadays with the NFR and many other requirements, if there are big client, if listed entities are there, it may be a requirement to get the audit work done reviewed by any other competent firm to ensure that they meet with the requirement. So having this signed of the review report is also one of the requirements. Monitoring. How the firm is monitoring the assignments, how do they conduct it, how do they do it, how these all standards are applying to the firm. That is also very important. There are a very good implementation guide, you know, these are the implementation guide of the institute, which is a very detailed material, and absolutely I would say that state of the art assignment, which will be absolutely helpful to the member, and anytime member can go through it and find out whether the necessary excuses are being followed by the firm or not, and they have to be documented. See, it is very important that peer reviewer will always ask that how it has been documented. Objective, leadership quality, sometimes conflict of the interest. Any staff member is having any business relation with the client, any family member of the staff is related with the client or a key person of the client, should be avoided. So usually a declaration has to be taken by from each staff member that they don't have any business relationship, none of the family member is involved, and none of them are having any direct or indirect business interest or conflict of interest in the particular client. If so, they should not be at all assigned into that particular assignment. So these are the requirement of the absolutely completed assignments, and they need to be documented actually. Then if you look at the leadership responsibilities, the review partner, the engagement partner, or the main partner has to demonstrate that they provided the leadership, they have done it, and they provided necessary guidance, conducted the training, resolved the queries, they went to the site, the client place, provided online support to them, offline support, discussions, they reviewed all the observations, made the changes to the audit program from time to time, and everything has to be demonstrated. Self-interest rate, how they have been, done, whether there is an advocacy, familiarity, long-term assignment, any relation with the any key person of the client. These all are like a self-review threat actually. So the firm should avoid that actually. The advocacy threat is, if the firm is getting like dealing with the share or security of the audited company, then what happens? Or if they are the advocate in the litigation, then there is advocacy threat actually, whereby this role may compromise or may result into the situation which can arise for compromise of a role of an auditor or the PU. Familiarity threat, where there is a long lasting relationship, overconfidence, PU can think that, okay, I know this client, all scenario will come. Intimidation threat. If there is a continuation scenario whereby the PU is, feeling intimidated or not getting support, not getting cooperation, or there is a continuous disagreement, or the applications, the accounting principle, or a pressure to disperse reduce, like client say that no, you don't need to do this, and PU is accepting. So all these things result into indeterminate threat, right? So in my opinion, these are the peer review kind of the overall review. And as I told you, in my opinion, the best thing is that first the PU should prepare the questioner himself should prepare a master file, divide all the assignments in all category. Like you can prepare Excel sheet with one column, name of the client, second column, nature of assignment, third, year, fourth, the fees which have been actually charged, fifth, name of the partner signing, sixth, UDI number for the same, seventh, any particular observation or remark. So what will happen? One can easily filter. Say, for example, if the peer review asks, give me the assignment handled by the branch. So from this file, if you put a filter, then you can find out, okay, these assignments have been handled by this branch. Or they ask partner wise. So similarly, filter partner wise and find out. Because when a sample is selected, usually the peer reviewer makes sure that at least one sample selected by each partner is covered. One sample done by each branch is covered. So it will be helpful to provide such master detail. So the data will remain the same, but with the filtering, it will be possible to give the detail in the required manner, and that will be requiring the uh, PU and the peer reviewer to make the things simple and easy to understand. So basically, these are the kind of the thing, and I would say that you can feel free now. Any question which you have, you can ask. I am now, I think it is, like we have time of around 7-8 minutes. So we'll devote, like some time if you have any questions which can be asked on that part. Now I will leave the forum open for any question or anything that may be asked, or I will request the moderator to have any question if they have received any question actually. Uh, okay, I believe there are no questions, and I don't
Hello,
think.
hello.
Yeah,
Yeah,
please.
yes, sir. Sorry, sorry.
Yeah,
There are some questions.
yeah, please go ahead.
Sir, there is one question from Mumbai. There is a minimum partners for mandatory peer review is four or five. We are
Five.
four, we are four partners in two branches. Still, we received letter mentioning it's mandatory for us. So,
See, the letter might have been received based on many other criteria. See, what
okay,
will happen? As I told you, five or more partners is a mandatory one criterion. But
okay,
there are many other criteria, like as we discussed from 1st April 23, turnover, the net worth, the borrowings are also one of the criteria.
yes, 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 sir.
Plus, there is a discretionary power to the peer reviewer board, whereby they can also select on their own, suo motu, based on
Okay,
any reference, any complaint, any like information, any public domain. So basically, once having selected, in my opinion, one should simply go and get the peer review done, rather than asking or challenging the reason why they have been selected. Yes, of course, if they want to know, they can write to the peer review board, and if it is within the scope, they may let them know the reasons also.
okay, okay, sir. Sir, there is another question. Can we go for voluntary peer review?
Yes, 100%. In fact, it is encouraged. I would
Okay,
say that the institute is encouraging, and that is the best thing. See, because voluntary adoption, like as we know that even in India is, voluntary adoption is always, like permitted, encouraged,
yes,
right?
yes,
Early adoption. Similarly, peer review, see, and it will give a very good, like hands-on, because one will be able to prepare. Secondly, once having done peer review, automatically next 3 years, the PU will be more in a position to keep the records. In fact, I would suggest that let the process be continuous. Peer review may be done at the end of 3 years for 1 month or 2 months.
yes.
But that process can be always made online in our own form. What we can do, like UDIN, we can prepare a master sheet. Whenever any UDIN has been generated, let it be automatically captured in that with all the detail like assignment, client, nature of assignment, the fees,
Yes.
partner signing, branch signing. So what will happen that will make things very easy. And even during the course, sometimes if anything is being taught by the PU, there and then only they can find out.
Yes, sir. And now Institute also sending monthly mail for all the certificates issued under
Correct.
UDIN. So
Correct.
that is also a benefit.
Benefit. And at the
Yes.
same time, peer reviewer also can have an independent database of the UDIS.
Yes, yes, sir.
So if the peer review furnishes the information or detail which is not in line or not in accordance with the record of the institute, then it may result into some problem.
Yes.
Because it is the duty of the PU to reconcile the detail as sent by the email if they think that something is wrong. Otherwise, it will be presumed that the data as per the institute record is matching and correct.
Yes, sir. Sir, we don't have any more questions.
Yeah.
So thank you so much, sir, for the session.
Yeah, and I will also like to thank you also as a moderator. I will like to thank, like the Mr. Srey. I would like to thank the chairman. I would like to thank vice chairman and everybody, all the participants. And I hope that even those who are having some dilemma, I would strongly recommend please go for the peer review. It has to be done once, then it is sooner the better. And sometimes please treat the peer reviewer as your friend, philosopher, and guide because they are coming from the same profession. Nobody has any interest or any object of finding any fault. So let
Yes.
it be a mutually process of improving. And yes, we know that there is always a scope for the improvement. It's a
Yes.
continuous process, right?
Yes,
So
sir.
thank
Sir,
you very
do
much.
you have a minute? We have one more
Yeah,
question. So
yeah,
if you
please,
can
please.
answer, yes. Sir, you mentioned that PR shall not take any documents of the clients when samples are selected and sent by email and sent to PR for review as a part of process. Does it mean that he is in possession of PU documents?
No, no. See what happens. There are two parts. Once the files and the samples are selected, they are communicated.
Yes.
The PU is expected to keep those files ready. Now, after communicating with the PU, after deciding the mutually convenient time, the peer reviewer shall visit the PU. At that time, there and then, in the presence of somebody from the PU, ideally the partner or some whosoever has been designated, any CA, they will show the document. So I don't assume, or ideally there's a situation a file is given to the peer reviewer and he himself goes through. Let there somebody be from the peer unit. They will show them the file. They will open the document. Whenever it is a soft copy, hard copy, because nowadays so many things will be in the soft copy.
Yes,
So they
yes.
can show them and that. And if any requirement is done by the peer reviewer, then the PU can think it over. And if they think that yes, it is okay, there is no violation, there is no non-compliance, there is no trade secret, there is nothing confidentiality, right? Say for example, I am doing some FMCG peer review. I mean the PU which has done audit of any FMCG. PU may be the possession of some trade secret, some recipe. So obviously peer reviewer should not be asking for those things. And if the PU feels that it is not in the scope, they should politely tell them that please give us the reason and how alternatively the same can be justified.
Thank you, sir. Thank you, sir. What is the applicability date for phase three? There are two or three questions the
Ah,
same.
yeah. See, basically, I think it was originally like from 1st April 24, but I would suggest that one should check on the website and determine the applicability so that all the units will be covered eventually. Though.
Okay, okay, sir.
So after 3 years of practice, ideally all will be covered in the phase 3. So that is the idea actually.
Okay, sir. Thank you so much, sir. I thank you on behalf of the committee and the institute for sharing your valuable feedback, valuable insights on this topic. Thank you so much, sir.
Thank you very much. Thank you,
Thank you.
everybody. And now I shall leave the meeting. Thank you
Yes.
very much. Okay,
Bye.
bye.